Hello everybody, I'm John with JP Strategic Investments, and today I'm going to do a review and analysis video of my interview with Peter Evans from Patriot One Technologies. Now, if you haven't already watched this video, especially if you're a Patriot One shareholder, I really recommend watching this video. I'll put a link in the info cards above and in the description below. It's really a good interview and he gives a lot of good information. No major announcements, but there's a lot of good kind of insights and little added information that you may not have gotten from the webinar and things like that. So if you haven't watched that already, I definitely recommend checking that out. In this video, I'll just kind of be touching on some of the main points of that interview and giving my thoughts and analysis on it now that I've really gotten a chance to rewatch it and gather my thoughts on the interview. Also, really quick, before we get further into the video, I do want to touch on the fact that the stock performed really well, up about 13 or 12%, depending on whether you're looking at the US or Canadian markets. But obviously, the stock is picking up steam. We'll touch on some of those extract contract announcements and things like that later on in the video. So let's get into it here. The first thing I want to talk about is some of the information that Peter was able to give us around how they're going to report revenue and around their recent contracts that they've signed. So the first thing here is he mentioned that the contracts, or the average contract that they're going to sign, is about a 36-month contract with a 1-year auto renew. And he did mention that in his experience, the 1-year auto renew just continues to auto renew every year as long as the customer is happy, and that makes sense. Personally, I really like the subscription model, and I think Peter laid out some really nice advantages of that model in the interview.
There's a lot of advantages to kind of the subscription model. For me, it's much more predictable revenues versus choppy revenues. I mean, you can imagine being an investor, and 1 month we sign $2 million contract, and the next month we sign a $500,000 contract. And you're going, wait a minute, whoa, there's this big drop. Versus, if I take a 36-month contract and it's delivering, as an example, $10,000 a month for a $360,000 contract, it's $10,000 every month. And the next one lays on top of it, and then on top of that, and then on top of that with each contract. So you get this kind of, gift that keeps on giving over time and very predictable revenues. It's also much easier for customers to get approved, that kind of a model, right? Instead of going for a very large approval up front, which might have to go all the way up to the CFO or the CEO, you're now using OPEX dollars, which are in the monthly operating budget, and it's much easier for them to adopt. So there's a much lower barrier to entry.
So as Peter mentioned, one of the major advantages, obviously making this much more predictable from a revenue standpoint. Now, there could be, as he mentioned, customers that do pay up front, and we'll have to do a little math there when we look at the earnings and kind of figure out, okay, how much of this revenue is going to be kind of drawn out through the next 3 years versus how much of that revenue is kind of upfront and different things like that. But it does make it a lot easier to actually kind of evaluate that, because he mentioned that there will be a bookings metric that will kind of show the total contract values that have been booked in that quarter, and then the revenue, which kind of gives us, okay, this is what's coming in for this quarter of those contracts. So we'll kind of be able to extrapolate from there how much revenue will be coming in over the next 3 months or 6 months, years, and whatnot, right? And then the other advantage of this is operating expenses versus more of a capital expenditure. If you guys aren't aware of kind of the difference there, usually a capital expenditure for a business is a larger expense, usually a one-time expense, something like that. If they were to purchase Patriot One's products up front, that would be a capital expense. But if they're going to do something more like the subscription model, where it's a monthly payment, it can actually be worked into the operating expenses of the business, which takes a lot less approval from higher ups like the CFO in the business. It's much easier to get a company to sign on with your products if you have a model where they can expense that as an operating expense. One last thing he mentioned on this topic is that they do eventually plan to break down the revenue by product mix. So how much revenue came from MSG or VRS or any of the other future products that they do announce. But in the short term, they don't plan to do it just because at the moment they really only have a small sample size of customers. As Peter said in the interview, the mix is very fluid at the moment. For example, they could have one customer that all of a sudden just buys a ton of VRS and it totally skews the product mix towards VRS, when in reality, maybe the average customer is more focused on MSG. So at least in the short term, we won't be able to see that, but long term, they do plan to kind of break that down for us so we can get a better feel for where the interest is with the customers. The next thing I want to touch on were Peter's comments around VRS and my questions about the improvements made to VRS. So one of my major concerns here was whether or not the improvements to the VRS and reducing false positives was increasing the alert time. And Peter was very adamant that that was not the case, that they were able to make incremental improvements to this without actually reducing the alert time. A couple of the ways they were able to do this was looking at behavior, and one of the more impressive ones to me was he said that they can actually look at badges or lettering across someone's jacket, shirt that says police or something like that to determine whether or not this is actually a threat or whether or not this is someone who should have that gun. So that was really helpful and really impressive to me. The next thing I want to touch on here were Peter's comments around MSG and customer priorities with false positives. And this was actually really interesting because Peter kind of described it in a way that I hadn't thought of before.
But think of it this way. Right now, 100% of the patrons are getting screened. 100% of the patients, therefore, by definition, are a false positive. And if you have to get screened a second time because my belt buckle, alerted during the walk-through metal detector, say 30%. Well, 130%, you're getting 130% false positive rate, right? You don't really need to screen all those people, do you? So most of the folks are looking at this and they should kind of change their mindset to say, well, okay, if I can achieve the same level of security or better security, right? But I'm only dealing with 10% alerts instead of 130% alerts, I'm 120% better experience for all those patrons as of today, right? And so you have to almost think of it slightly differently and a different kind of approach and not look at things just kind of independently as a silo. Oh my gosh, you're 10% false positives, 5%, 2%, 12%, whatever the number happens to be for that stadium, right? You have to look at it in context of what the two alternatives are, right?
Gotcha.
One alternative, 100% friction, 100% touch, 100% contact in a COVID world, 30% rescreening, 500 people an hour. Some very, very large percentage just walk right in, have a great experience, and a small percent go through what they would have gone through anyways.
So this was really interesting to me because I hadn't really thought about it this way, but it actually makes sense. I mean, everybody that walks through a walk-through metal detector is affected by that metal detector. They're affected not only waiting in line for the people in front of them to go through, but also when they do go through, you have to take everything out of your pockets, put it in the tray, walk through. It takes, as Peter said, around 9 seconds per person. Whereas with the MSG lanes, you're pretty much walking through. Most of the people, probably 90% of the people, as Peter said, who are walking through these lanes aren't even affected at all. So you could honestly count everybody that walks through a metal detector, a walk-through metal detector, as a false positive if you're comparing the MSG versus the metal detector. Plus, you add on top of that the 20 or 30% of people who, even after they walk through the metal detector, are asked to step aside, they're rechecked and whatnot. Now you get to that 130% number that Peter mentioned for the false positive rate, compared to maybe the 10% false positive rate of the MSG, and those people are asked to step aside and just rechecked as they would be with a regular walk-through metal detector. So this was really interesting to me and I think really helpful because it added a lot of extra context as far as how potential Patriot One customers are evaluating the system, because really they're going to be comparing it to what they have now, right? And as Peter said, 10% is a whole lot better than 130%. So the next thing I want to touch on are these extract contracts, and Peter did mention we were going to get some press releases around these, and we did actually just get one today. So what we're looking at here, I believe, is a contract that has already been announced. If you watched one of my previous videos, we went over 2 contracts that were already announced. Now, one of the things that is kind of interesting to me is that this contract is valued at just over $999,000, so right about $1 million, and that actually doesn't fit the amount of either of the contracts that were announced by the Canadian government. We have one here that is about $230,000, and then we have one here that is about $1.15 million. Now, one of the things that I think might be happening here, and I'm not sure why they would do this, but this actually is pretty close to the US dollar value of this contract here. It's off by maybe 30,000, 40,000 or so, but that might be in relation to the fluctuation between currency prices right now and things like that. That might account for that margin of error. I think that's what's happening here. I think this is one of the contracts that was previously announced, and they're just putting the number in US dollars here. I could be wrong, though. This could be a new contract. We'll have to see. Peter said they were going to be putting out press releases for each of the contracts, so If we see another one that's 1.14 million dollars, or another one that's 230,000, then we'll know that this is a new contract. But one of the main things I want to touch on with this contract is, and that we didn't know before, it's a 12-month contract. So, if we're talking about one of the major concerns with Patriot One has been their cash burn, right? So their cash burn rate right now, excluding any COVID relief money and things like that, is about 3.5 million Canadian dollars every quarter. So that equates to about 14 million per year. So this is about 1 million. That would drop it down to about 13 million. Not a huge difference, but we're taking little chunks off here and there. Obviously, we're going to have revenue coming in from these contracts that they've signed, which hopefully we'll get kind of an idea of that in the earnings report in a couple weeks. But obviously the stock seems to be reacting pretty heavily to this. I mean, if we look at the stock here, like I said, up about 13, 12%, depending on which one you're looking at. I have to imagine that this is mostly a result of a reaction to this contract announcement, but it's kind of weird because, a lot of investors, they'll either watch my videos, they're part of the Facebook groups and things like that. These contracts have been circulating those groups for at least a month now. And so it's kind of weird that we see a severe reaction like this to an announcement. But, I guess maybe a lot of investors weren't quite sure. Maybe they were waiting kind of to see Patriot One announce this before they made any investment moves. We'll have to see. But just really interesting. Good to see the stock moving on this, and we'll have to see based on future announcements, whether this is actually one of the contracts that was previously announced or whether this is a new one. The next thing I want to touch on here was Peter's comments around NCS4 and the webinar that they did with them and their newly announced partnership. One of the major things that I took note of here was that he said, generally on average, those webinars that NCS4 have about 50 people in attendance, viewing online. This one, they said they had 400 or over 400, I think. So, and Peter also mentioned, I think they already have one pilot as a result, a direct result of that webinar. So we'll have to see, maybe more will trickle in, but should be really good for Patriot One. He mentioned a lot of new resources that they'll have available at their disposal because of this partnership, and that sounds like a really good thing for Patriot One. And a couple more things I want to touch on here. One is my question about the NDAs and whether or not Patriot One will be able to use customers as references if they have an NDA. Well, Peter mentioned that many of the customers that they currently have NDAs with, remember, non-disclosure agreements, these are customers that don't want to publicize them using Patriot One's products or what type of Patriot One products they're using, just for security reasons, right? It's understandable. But Peter did mention that a lot of these customers that have NDAs, they are willing to talk to one-on-one potential Patriot One customers and kind of give them a review and a recommendation if they like Patriot One's product. So that's good to know because it means that Patriot One doesn't have to start from square one with every new customer. They can actually lean back on some of their previous customer wins to gain new customers. And the last thing I want to touch on here was actually Peter's answer to my last question, and that was around what really separates Patriot One's products from their competition. One of the main points of his answer to this question was that third parties have actually validated that Patriot One's products are better than their competitors. We're talking about accuracy, we're talking about alert time, and also Peter did mention that they are generally cheaper, whether it be from a direct price standpoint or whether it be because Patriot One is offering that subscription model, which makes it easier for those customers to actually adopt the technology rather than a big upfront cost. So for me, that was really good to hear. It's not just Patriot One saying they're better than their competitors, but other customers, other companies that have tested out their competitors' products and Patriot One's products, and they're saying that Patriot One is better. So overall, I thought the interview went pretty well, and I thought Peter gave a lot of good information. And I appreciate all of you that took the time to watch it. I know it was a pretty long interview, but again, I think it was really informative, and I think Peter actually gave a lot of new insights and information that maybe wasn't in the webinars and things like that. So again, if you haven't already watched the interview, the link will be in the description below, so you can go check that out. Other than that, I hope you found this helpful. If you did, don't forget to hit the like button. Other than that, see you next time and have a great day.